Welcome to day 80 of me backtesting my way to success. First trade was a loss, and the reasons why I entered were this 4-hour fair value gap, equilibrium from the swing low to the swing high, and once price was inside of the golden zone, I entered on a breaker structure inside. Yeah, I entered on a breaker structure, and take profit was the swing high, stop loss was below the fair value gap with a little breathing room. Price completely stopped me out. At first I thought it was because my stop loss was too tight, but completely went down. And reasons as to why I lost, well, there is this liquidity area right here, but price didn't take out this area of liquidity. So next thing that I did was to look at the daily and weekly chart, and as you can see, there's this huge impulsive movement. In the weekly, you can clearly see it's an impulsive movement, but in the daily, you can also see it because there's just a few wicks to a few candles to the opposite side. So yeah, I placed my equilibrium from this swing low to the swing high. Is currently there, and it actually also makes sense because I think because I didn't really look into the daily and weekly chart and kind of zoom out. I think that was my mistake because I didn't do that. I did not see that we're currently still inside of the impulsive up movement, and so there was no real retracement inside of the daily and weekly chart. And so yeah, I should zoom out, look at what price is doing in the higher time frames. And yeah, let's just see how the next trade goes. Next trade was a win, and the reasons why I entered were this 3-hour order block, equilibrium from the swing low to the from the swing high to the swing low. Sorry, and I entered inside of the golden zone on a breaker structure, which was right here. Stop loss was above the order block with a little breathing room, and take profits were number one, this volume area, number two, the swing low. And the reasons why this volume area is purple while my other volume areas are red is because this volume area is a really strong one, because there were like 3 or even 4 consolidations that had their volume area right or around this area. I counted it like in this radius, and so yeah, it's a really strong volume area. That's why I marked it in a different color. And actually, there were a ton of trades where I was just, for fun, just doing like, oh, there's this volume area, and this very huge, very strong volume area that I just told you about. What if I would enter on a breakup structure in the lower time frames? I just got that feeling, kind of my market experience told me that price was going to go down, but I was like, nah, two conferences, I don't want to enter. It's not safe enough. And then it would have been hit. And then same thing right here again. I would have entered right here, impulsive move away. Take profit would have been the golden zone, which was from the swing low to the swing high right here, and it would have been right here. And so I'm really considering about like about changing my entry model to just really break of structure and just in general more volume area trading, because it really seems to be working. And so I'm gonna backtest a little more, but we'll see you on the next one.